Welcome to BD Daily Finance News Podcast, your daily briefing on finance and investing. It's 2026, January 5th, and today we're connecting three dots: IPO risk appetite, inflation reality checks, and the safe haven trade when geopolitics hits.
I love when markets do that thing where they panic in gold, chill in stocks, and act confused in oil. It's like everyone's group chat is on different time zones.
First story: Hong Kong biotech is thawing after what people called a biology winter. Investors are piling back into biotech IPOs, even for companies that don't have revenue yet, because the pitch is shifting from someday to we can license and monetize earlier.
Pre-revenue biotech is always wild. It's like buying a restaurant based on the chef's vibe and a PDF of future menus.
Here's the simple finance behind it. IPO markets reopen when investors believe there's a path to cash, either through product sales later or through licensing deals sooner. In biotech, licensing is like renting out your best recipe to a bigger kitchen that can mass produce it.
So instead of "trust me, we'll cure everything in 2034, it's "trust me, Big Pharma will Venmo us milestones along the way." That's honestly more relatable.
Why it matters for normal investors. When IPO demand returns, you get more listings, more hype, and also more dispersion, meaning some deals hold up and some crater once the lockups and early excitement fade. Actionable takeaway: if you're tempted, size it like a speculation, not like a retirement pillar.
Don't put your mortgage money into a company whose revenue is currently good intentions. Put it in the fun money bucket with rules and a stop loss for your ego.
Second story connects directly. Insilico, newly listed in Hong Kong, signed an AI drug development partnership that could be worth up to $888 million. The timing is the point. Markets like an IPO story more when there's a concrete commercial validation right after listing.
Up to $888 million sounds enormous, but up to is doing Pilates here. How does that number usually work?
Great question. Up to typically includes upfront cash, research funding, milestone payments for hitting development targets, and royalties if a drug actually sells. Think of it like a video game. You don't get the final treasure chest until you beat a lot of levels.
So the market hears $888 million and goes, "Congrats on your potential future allowance." Still, it's better than nothing because it signals somebody serious did diligence.
Exactly. Why it matters: for biotech, partnerships can reduce funding risk. If milestone cash offsets burn, the company may need fewer dilutive share sales. Actionable checklist for listeners: look at cash runway, quarterly burn, and whether the deal has meaningful upfront versus backloaded milestones.
And if you don't read filings, at least read the structure. Upfront money is like getting paid for the first gig. Milestones are like, "we'll pay you when your band goes platinum."
Third story: Turkey's official data says annual inflation fell to 30.9% in December, down from 44.4% a year earlier. 4 straight months of declines. But an independent economists group, ENAG, put year-on-year inflation at 56.14%. That gap is the headline risk. The simple version: inflation data guides interest rates, and interest rates drive currencies and bond prices. If investors don't trust the data, they demand a higher risk premium, meaning higher yields, weaker currency, or both. For everyday investors, it affects EM ETFs, global bond funds, and companies with exposure to Turkish demand or costs.
Action step: if you're in emerging markets, check if you're being paid for the risk. If the story is disinflation, make sure the currency isn't quietly eating your returns like a stealth tax.
Quick wrap on the geopolitics trade. After the U.S. captured Venezuela's leader, safe havens moved. Gold rose and the U.S. dollar strengthened. Some reports pegged spot gold above roughly $4,420 per ounce early Monday before easing. The key lesson: in shocks, capital often runs to liquidity first, and the dollar is still the world's biggest liquidity pool.
And oil didn't automatically go full action movie soundtrack, which is a reminder: headlines are drama, prices are math. Supply expectations, spare capacity, and positioning can matter more than vibes.
Recap: Hong Kong biotech IPOs are warming up. Licensing deals can de-risk the cash story. Turkey's inflation is cooling, but the credibility gap matters. And geopolitical shocks can lift both gold and the dollar, while oil reacts differently than you'd expect. If this helped, subscribe and share it with one friend who needs a calmer map of the market.
And if you're about to chase an IPO because it's the next big thing, repeat after me, position sizing, because the only thing that should be oversized is your curiosity.